Is a panel discussion on profitability of Paytechs, and the moderator of the session is Shobhit Mohan, the Vice President Marketing PayU. May I invite Shobhit on stage, please? Joining Shobhit will be Chandan Joshi, CEO of Mobikwik. Chandan, welcome. And along with Chandan, I have Deepak Tomar, who is the CEO of Novus Loyalty. Welcome, Deepak. I now ask Shobhit to take it from here. This is a quick 30-minute panel discussion. There may not be a possibility for us to take any questions. However, let's see how it goes from here. All the best, Shobhit. Take it from here. Thanks. Yeah.
Hi everyone, thank you for being here. I will briefly start with a little introduction to myself and then ask the panelists to introduce themselves and talk about their stories and where the businesses are at before we get into some of the questions. I'm Shobhit, I head marketing for PayU Payments, been with PayU for a year and a half now. Chandan, why don't you?
Yeah, hi, I'm Chandan. And I've been with Mobikwik for 4.5 years now. Started in 2018. Prior to that also I was an entrepreneur. Before that 10 years of investment banking. So at Mobikwik, I hope you guys know. So at Mobikwik, I hope you guys know, we are one of the, I would say one of the largest pure play wallet companies left in India. We are in Fintech as well as in payment aggregation. Thanks.
Hello, myself Deepak Tomar, I'm CEO of Novus Loyalty. So we are a SaaS-based reward and recognition platform. It's open for enterprise, it's open for e-commerce, it's open for other businesses too. We've been operational in India for about 3 years now. We work very closely with NPCI and banks to do their enterprise-wide loyalty programs. Yep.
All right. So I think the first question I want to ask both of you, maybe one by one, starting with you, Chandan, is just explain to us as a business where you guys are at, profitability, how high that is in terms of focus, what have you guys done, what you're looking to work on?
Sure. So I think profitability, this is one of the most important and I would say controversial topics, in the payment industry or fintech industry in India right now. Since, UPI came into the picture, it became extremely difficult. Although it has been great for overall ecosystem, users, merchants, everybody in the industry to come on to the digital payments network. But considering it has been free, that has been a little bit challenging, I would say, for most of the companies in the payments industry to generate revenues. So, however, for us, I would say, to give you an example how we have grown, in 2018, we had around, I think, 35 to 40 million users on our platform, and I would say less than 1 million merchants who were transacting. And in last, I would say 4.5 years, now we are close to 130 million users who are digitally transacting or who have onboarded onto our platform. In addition to that, we have more than, I would say, 3.7 million merchants. Including offline mom and pop stores, online everywhere, who are accepting payments via Mobikwik today. Now, we have never raised billions of dollars, in this, during this period. We have always been extremely conscious about the fact, that we have to ensure unit economics of every transaction. And we kept acquiring merchants for our wallet business, for wallet acquiring. We give UPI as a free service, but primarily it's difficult to generate revenues from, I would say, as anyone can agree, from free transactions. For wallet, of course, there are value-added services that we can do. We can do cross-sell and number of other things that we have tried over a period of time, running marketing campaigns, joint marketing campaigns, co-funding campaigns. So these are all tactics in which we have been consistently trying to grow year on year instead of trying to, I would say, be 10x in a couple of years just by funding in a lot of money. So we have grown in, I would say, in a scalable way, consistent way, and where we are today, we continue to invest money into the business, but we try to remain close to close to the break even. So for example, last year, year ending March, so for a couple of quarters in a row, we were net profitable, which was, a great feat in the fintech industry for us. And of course, now going forward, we are planning to keep growing and investing money, whatever we generate from the business. Yeah.
Thank you. Deepak, you're in a slightly different business model, so I'd love to hear from you as well.
So profitability is definitely very important, unless until you are a non-profit organization. So I understand in Chandan's space, like it's very important to scale the business, and then you need to continuously invest in customer acquisition and a lot of stuff. In our business, where it's a SaaS business, you need to invest lot upfront. Like you need to invest lot in technology, but once you are there, once your product is mature, then it's easy to achieve the profitability. So depending on the business model, 100% profitability is super important. Either you're going to get profitability soon or later. It should be there in your business model. In some of the Paytech companies, they need to continuously invest in that. In our case, we need to invest a lot in first 3, 4, 5 years, but once it's there, then it's easy to make a SaaS company profitable in comparison to a Paytech company. Yep. So in our case, we've been investing heavily on technology upfront, but yeah, of course, in 3, 4, 5 years, then there is a roadmap like how it's going to be more profitable over the time. Yep.
Perfect. One of the questions I had for your overall is, I remember in 2016, I remember reading a report which said that if India reduced its dependence on cash, it would mean another extra 10 to 20% to our GDP growth rate. So I think we were growing at about 6, 7%. That means 1 extra percent of growth. In 4 years, we've taken so many people off cash for a large portion of time. A lot of technology development, market development has been done. Is it very important from a overall ecosystem standpoint? Like, should profitability be so important in your mind? At an individual company level, obviously, like you said, if you're not a non-profit, then obviously it's important. But do you think the ecosystem should worry so much about profitability when so much has been done in such short time, and more is to come? So
100%, we are a growing economy. A country like India should not be worried about only profitability. Of course, lot of investment need to happen. The kind of financial inclusion is required here. So I won't say profitability should be the only factor here. Of course, you as a company wanna be profitable, but it should not be the only key. A lot of investment need to be done by either its regulatory bodies, and they need to make it little bit, they need to amend few things so companies can leverage those things, leverage those policies to be profitable. But in my views, profitability should not be the only thing we should look here. A kind of financial inclusion India was able to achieve through all new age payment companies, like hats off to them. Of course, government provide a lot of infrastructure, a lot of policies and all those stuff. But I think real inclusion happen from people like Mobikwik and other partners as well. So we should not only concentrate on profitability, we should also concentrate on how they are contributing to the digitalization. Digital payments are happening, a lot of other things are happening around that. Maybe unit economics are not profitable, but eventually the kind of inclusion is happening. That's going to make, I would say, that's going to contribute a lot.
No, I completely agree with you, Deepak, there. So I think for us, we are in a B2C business, primarily B2C business. We have a B2B business as well, which is payment aggregation. But in B2C business, there are two metrics that everybody looks at. Of course, profitability is the most important metric that you would like to look at any company. But important thing is growth. So if we are able to drive like digital inclusion, we are able to provide most of the tools for most of the India, like in tier 3 or tier 4 towns. If we are able to bring them on digital platforms, the experience that has to be funded, we can't start charging them, money from day one. This is the first time if they are experiencing new technology, it has to be, someone has to fund it, But over a period of time, for any business or any company, it's extremely important to have some kind of visibility that at what point in time you will be able to generate some profits to recover all the costs or investments which has gone into the business. And as long as that visibility is there, we can keep investing or reinvesting the cash flows that we are generating from day-to-day operations and keep bringing more and more users onto the platform. So this is kind of the thought process with which we have been able to achieve the scale. Of course, we are still growing. We are still able to acquire more than somewhere between 2 to 3 million users a month, which is not a small number. But in order to stay, not to go into too much red, going into red is very, very easy. If you just start giving cashbacks and stop focusing about where the money is going to come, it's very, very easy to spend 100, 200, 500 or 1000 crores also in a month, and everybody will come onto your platform to transact. But all those people are actually coming for cashbacks. As soon as you stop giving cashbacks, they will find another platform, So with acquisition, retention of users onto your platform and engagement of those users who have already visited your platform once, over a period of time, that is another metric, which of course we have been trying to do by adding more and more products and features, for which user does not need to necessarily move on to some other platform. And these are kind of cross-sell opportunities for us, where we can generate additional revenue. In addition to that, for user acquisition also, if you start using performance marketing, the cost of user acquisition is extremely high. In last 2 to 3 years, we have seen a lot of companies reporting, how much marketing spends they have done and how many users they have acquired. But for us, because we have done this for 10 to 12 years now, for us, we have seen we have seen enough ups and downs to stay sane, even if everyone is going nuts, if I may say. So what we do is we just stay focused on it, and 80% of the user acquisition we try to drive organically. So we don't pay for, all the users that we acquire. So average cost of user acquisition, we try to keep it below 15 rupees, so somewhere between 13 to 15 rupees for every user that we acquire onto our platform. And, that effectively fuels what, we do. But the biggest challenge for, in at least specifically in B2C industry is, when you hear numbers like somebody has 500 million users onto their platform, and so that triggers a reaction that let's go, spend more money to acquire more users if someone else is doing. So important thing is to stay focused on what you want, consistently keep doing that over a period of time, because ups and downs will keep happening, which makes it B2C industry specifically extremely, competitive in Fintech. And with UPI coming, all other features and products which are being launched on UPI, it's extremely easy for anyone to launch a payment application. In fact, any one of you can start a UPI acquiring app and start making payments from your own app. So it's like the level playing field is completely open for anyone to start today and build whatever you want to build on it, which is a great thing. It keeps everyone on their toes. But then at the same time, it makes it extremely difficult to stay profitable. So, that's what kind of my opinion is.
Thank you. You mentioned performance marketing. So like as a digital marketer or marketer, one of my favorite observations is that in any competitive market, Google is always the only winner. So I will raise my bids, my competitor will raise their bids, next day I will raise my bids. Our acquisition costs will go up, numbers don't go up, but Google is now making double the money that they were a week before. So totally get that. I want to ask you, I think one of the things that maybe people in the industry realize but outside don't realize as much is that fundamentally most companies' unit economics are profitable, but it's other costs in, things which have risen in the last 3 to 4 years. So maybe starting with you, Chandan, can you just talk a little bit about some of the other costs that maybe not very visible to people outside the company in terms of what is dragging profitability down, or some of the costs that people need to consider before they look at profitability of a company?
Yeah, sure. So I think Deepak just touched upon it, like technology investment. So in last, I would say 4 to 5 years, at least, since I've been, looking at the payments business, the biggest cost which has been there for last, since lockdown also started, it has been technology cost. Technology cost is not just infrastructure, AWS or other tools. They are also extremely expensive, and you have to pay in dollars when your revenue is in 1 rupee or 2 rupee, at scale. And second, people cost in technology also, it has been the, biggest driver. And we have seen it, I would say, in 2020, the competition to acquire, talent in technology, people were giving away bikes, cars, and everything. So that's another thing which has risen consistently over the period of time. So for good people, there is no top limit, at least in the technology business. In addition to that, infrastructure cost, we have to keep upgrading our infrastructure for, new things which, so for example, NPCI, I'm sure you guys were there for the launch yesterday. All the products which are launched, it's not that it's all going to happen like that. We have to invest resources, product, business, everybody's time, effort. We have to find partners who will actually utilize our BBPS, Bharat Bill Payments, cross-border system, APIs. So we have to actually travel across and find partners who will consume those. So all those things are there, and it all adds up at scale. You can't necessarily say this is one thing, but so continuous investment in technology, infrastructure, and people. These are basically the biggest cost drivers. On top of it, if you add user acquisition also. So in fact, some of the fintech players nowadays, there is a lot of competition for acquiring merchants also. So it's not just customer acquisition cost, it's a merchant acquisition cost also. So if you go to an offline store and if you want to put on your QR code, I'm pretty sure you guys must have read news about it. People fighting, tearing each other's QR code. And so if you want to maintain visibility on a shop, that even if it's UPI interoperable QR code, for that also people are fighting. From marketing, that that space is extremely valuable. So all these are costs. So ensuring that whatever merchants you have acquired once, you have done their KYC, you have trained them to use your product and services, and then and 15 days or 1 month later, he is still accepting payments via you. That is also a cost. It's not, and then of course, if you are processing payments for all different modes, you work at PayU, so net banking, debit card, credit card, everything has a cost. We have to pay to acquirers to process all the transactions. So that is input cost. So there are enough costs to to think about before I would say entering into the business. But of course, if you build whole platform on free rails, so for example, if you use UPI to transact everywhere, so there is no cost for a user. So as a user perspective, I think we were just discussing about it. You mentioned that if you are in US or wherever, so just like last week we were outside India, I withdraw some money from ATM, at 2,000 dirham, and the fees was 26 dirham. So if whatever you withdraw, you are paying that cost. It's free in India. So it's kind of the best place for a user to be, here, because you get cashbacks, everything is funded, everything is free, so it's amazing, great experience. But I think right now, if we have, a couple of 100 million users who are onto the digital platform, 500 million users who are on smartphones. So we still have a long way to go there. But once everyone is used to all these platforms, I think there will be a time when we can start, People will be comfortable, for example, buying insurance on app. Right now, I think majority of us, we might buy a small 20, 50 rupee insurance as a cross-sell on an app. But if you want to buy health insurance, you want to interact with someone. You want somebody to come to your house, explain everything. But I think once all these things start moving digital, there are opportunities for, fintechs to add more revenue also to the kitty.
Okay. So Deepak, I think you are in a slightly higher margin business in SaaS, but some of the things that you mentioned, technology costs, AWS costs, are you also experiencing that to the level of magnitude that a consumer business would?
Sure. Specific to our business, if I need to calculate the cost, so I'll always, what cost I can pass to customer and what are the costs I will not be able to pass to my customer, right? So we are in a B2B business. We touch customer in at some point, but mostly it's B2B. So there are technology cost, infrastructure cost, I won't be able to pass it to my customer. And then it's geographical specific as well. In India, we cannot pass a lot of costs to banks. Banks are direct customers. They're not going to pay you for technology. So you need to find other ways, or you need to change or pivot your business model a little bit, how you're going to pass that cost to your customers or your clients. As in business, that's what I think all the time, like if there's a cost, how I'll be able to pass that cost to customer. We as in SaaS model, when we just do one kind of service, right? So we just say, okay, customer not going to pay for the technology, customer not going to pay for this, how I'll be able to recover that cost from my customer. It's going to be a transactional, I'll just charge him 1 paisa per transaction or kind of a thing. If we give platform as a service, and you mentioned it, absolute, like Google is the winner here, right? So if you're using Google Maps, right? After a certain point, they charge you for API calls. Like if you're going to use more than these API, after you meet a threshold, then you need to pay them for each API call. That's how we are building our business. Like if you're going to use this many API calls, then we're going to charge you for these APIs. So I would say, always calculate what you can pass to your customer, what you won't be able to pass to your customer. To be profitable in a SaaS business, that's important. If you've been able to pass that cost to your customer, you'll be profitable. If you won't be able to pass that to your customer, then you won't be able to make profit out of it. So that's how we segregate our cost. Of course, as Chandan mentioned, infrastructure, technology, of course, tech talent being expensive, at least the cost is 3 times what it was a couple of years back. So it's really hard to retain that kind of talent, and it costs you a lot more what it was costing you before, right? But we all are sitting on this technology, so we have to bear all those costs in our margins. So if you do a good segregation, what you can pass and what you cannot pass to your customer, then it's easy to be profitable, or at least you can put that in your business model.
I think I was sharing with you guys, I'll share with everyone. One of the observations I have is, I used to work for an IT services company way back, and we were competing in the US and Europe and all these markets. And every time a lot of customers would come back and say, what does your financial sustainability look like? It was very coded for, they want to work essentially with the deeply entrenched multinational large companies, right? Like, so IT companies, Indian IT companies, HCL, TCS, Wipro, we were all sort of disrupting a very well-entrenched business model, and financial sustainability was, in some ways I felt, like in my personal experience, I felt it was like a code word for saying that, look, we don't want you here, we want to work with the established players. And I kind of feel like some of the conversation now also has maybe a risk of disrupting the innovators in our country. Right? Like if the only way to innovate is to innovate profitably, there is only 5 companies in the world which will be able to innovate. And so I think I want to sort of understand from you, apart from profitability, which again, right, like any business, no business leader does not want to make a profit. Like, that is what your entire reason for existence is. But what can like a customer or a client look at in a company in terms of sustainability, which is not just, the final like sort of line item on the P&L, but if I'm trying to evaluate a company, what should I look at in terms of this is a sustainable company or not a sustainable company? So I'll start with you, Deepak. Yeah.
So of course, when you start a business, of course you want this to be profitable business, but what your customer gonna look at? Customer not gonna look at you as a profitable company, that how much profit they gonna make. Of course they want you to be there in the business. They don't want to work with anybody who gonna run away. Like after 3 years, they're not gonna be there, so they're not profitable. They're not gonna be around, of course. But they'll see one thing, brand as well. You need to build as a brand. Like, of course, you don't need to be that profitable, but you need to build a brand. You need to have your own set of rules. These are the rules that gonna define you, that gonna define your company. That's what you do better than everybody else. So you need to create your brand image, and that's gonna help you to retain those customers, right? So although everybody can say all these companies are doing same thing, but every company is different. Every company is different in a way it's been structured, the kind of people it has. What are your values? As a company, what are your values? Like how, and that's what customer gonna see, not just the profitability, if they're gonna be there, not there. How you put yourself in front of the customer. These are my values, these are my core values. I'm gonna stick to these 5 values, and then customer gonna trust you on basis of those values. Of course, those values need to reflect whenever you're gonna talk to your customer. Those values should reflect, and those values gonna come from the founders, your basic team that you have put together. So those values are very important. If you put your values in front of the customer, customer will gonna create a brand image as per those values. So not just the profitability, how you put yourself in front of the customer, that's very important too.
Yeah, completely agree with you, Deepak there. Just to add, as I was talking about it earlier, that anybody is open route right now, at least in the payments industry, to start a payments app. If you want to process payments, it's extremely easy for anybody to do it. After interoperability, UPI interoperable QR codes which are already there. PPI interoperability is also, we have already launched it. So ultimately it does not matter who acquires the merchant. So for example, if PayU is the merchant acquirer in anywhere, it's possible for me as a user to use any of the apps to make a payment to that merchant. It does not need to have your own QR code or your own acceptance there, because everything is interoperable. You can use any app to pay to anyone wherever. That makes it extremely important, going forward, to have the best user experience or user engagement for any app. So choice is with the user, not with the merchant. So user decide which app I can make a payment using any app, which app I want to keep on my phone. So basically repeat usage on any app, kind of the metric. So if you see that if you have acquired 100 users and 80 of them come month on month on your platform to transact, because you are able to provide them the best experience. Ultimately, making a payment is just a utility which everyone has, and every app will have. But with that utility, what are the other product services and the experience, customer service, all those things which come together, and you ensure that the user will end up choosing your app to make the payment. That is the differentiating factor, at least in the payments payment space, I see going forward, which is going to happen. And we are actually very, very strongly trying to, build that into our app experience for all the users. So that means that at any point in time, if we are able to retain more users, at any point in time, if we are launching other products and services where we can make revenue, or we can cross-sell, or we can show ads, or whatever, we will be able to make money. So that opportunity is open for us. But if we are not able to retain the users who are coming onto our app, then it's a new user acquisition every month. So you'll never be able to become profitable. So
I think we are over time. So we'll wind up. Thank you, Chandan. Thank you, Deepak. I know this is a very important topic, but also not a topic that is very easy to talk about. So I really appreciate you guys being as candid as you were. Thank you so much.
Thank you.
Thanks.
Thank you, everyone.
Thank you, Shobhit, Chandan, and Deepak for doing